free to interrupt me at any point in time to ask questions so we can make this more of a dialogue and a conversation rather than a presentation. Here's some handouts for those of you that just walked in. Come on up, don't be shy. All right. So my name is Schiciano. I'm president of Levitt-Fuirst Insurance. I work with many of you, so thank you for coming to listen to me. What better thing to do on a Thursday evening? I can't think of anything more interesting than talking about insurance. And what I wanted to talk about today was natural disaster insurance. So there's a tremendous number of different types of natural disasters. You know, the hurricanes right now are at the top of our list because of everything that's been in the news, but many other things, right? Flood, earthquake, blizzard, tornado, there's environmental natural disasters, terrorism, cyber risk. So all of these things have different types of insurance associated with them. But today, we want to talk about hurricanes. That's what's on top of everybody's mind in light of the unprecedented damage that's been done from the several hurricanes in recent weeks. You're welcome. Okay, so here's what's going on. Since the year 2000, we've had the 10 most costly Atlantic hurricanes in all of history. And that doesn't include Harvey, Irma, and Maria. So, you know, Sandy was unbelievably expensive at $29 billion and Katrina at $62 billion, but the cost of these three latest hurricanes in total is going to far eclipse the cost of any other three hurricanes that are up there. And keep in mind, these are all since the year 2000. So, you know, something's going on, and it's not exactly a good thing for those of us that have to address insurance for hurricanes. So just when you look at the numbers, Irma, which hit Florida, and Harvey and Irma, which hit Texas and Louisiana, the estimated damages are $150 billion or more. And the estimated insured losses for Harvey are $10 billion, and for Irma, 25 to 35 billion. Similarly, Puerto Rico with Maria, estimated damages at 95 billion and insured losses at 40 billion, roughly. So what's the issue there? When you look at those numbers, what's the issue or the concern?
Insurance rates are going to rise.
Well, you got $150 billion from Irma and Harvey of damages, and insured losses are somewhere between 35 and 45 billion. So there's a little bit of a gap there, right? Like $100 billion, give or take. So, you know, where is that money going to come from, right? The amount of damage is far eclipsed what the insurance is going to pay for. And part of the issue is what is often not insured when it comes to hurricanes. What is often not insured for? You've been hearing it on the news. People think they have insurance, they've got wind insurance, but they don't have flood insurance. Right. Less than half of these losses are going to be, where there were flood losses, are actually covered by flood insurance, which is going to be a terribly bad financial situation for a lot of people. And we're going to spend some time talking about that. So hurricanes bring all these things, right? Wind, rain, and flooding. Right? Wind, rain, and flooding. Thank you, sir, for attending. There you go. All right, so what's special about those three pictures at the bottom that have little red borders around them? Anybody recognize this little symbol right here? That's the Westchester Park symbol. So those bottom three pictures are flooding in Westchester. And we haven't had, a barrage of hurricanes, thank goodness, this season, but everybody remembers Sandy most recently. and how devastating that was with the water, and even in flooding in areas that had never flooded before, including parts of Westchester and in New York City. So hurricanes bring wind, and wind claims are usually covered by commercial property insurance, meaning insurance on buildings, whether they be office buildings or condominiums or co-ops, and also usually covered by your homeowner's policy. Now, sometimes your policy, especially if your home or your building is on a coastal area, you know, on the east side or west side of Westchester, for instance, sometimes if you look at your policy, you'll see something called a wind deductible or a hurricane deductible or a named storm deductible. And what that is it's a percentage. Instead of having a dollar amount of deductible like $5,000 or $10,000 or $1,000, you'll have a percentage, like 2%. So if you have a $10 million building and you have a 2% wind deductible, and a hurricane damages your building, what's your deductible? $10 million building, 2%, $200,000. And it's not 2% of the loss. It's 2% of the building limit, the amount that the building is insured for. So there's a good chance that if you've got a $10 million building, and many of you manage buildings or own buildings that are significantly more than $10 million bucks, and you have a wind deductible of, let's say, 2%, which is not even at the high end, that if you have a roof blow off or a whole bunch of shingles or water coming from the roof blowing off, that's a wind-related deductible. That's not going to be covered if it's under your $200,000 deductible. So that's something that you really need to pay attention to and ask your broker about. Make sure that you don't have it, or you don't have it on a renewal policy after all these hurricanes, because it might slip by you and all of a sudden you've got a huge loss and everybody's surprised that their loss is still way under this massive deductible. All right, so that's wind. Rain. Rain is also usually covered by commercial property, by homeowners policies, but when you get wind from a hurricane combined with rain, if water comes in from an opening that was there before the wind came, that's probably excluded. So wind-driven rain that makes its way through the side of a building that was in need of pointing for 2 years before the hurricane came, and you were just putting it off because that's a big nut to spend, the pointing, and the building's still structurally sound, and usually rain falls vertically, not horizontally, so that won't be covered. And everybody will be shocked, and they'll wonder why. Yeah.
I have a question.
Yeah, good.
So I live in Westchester, and Sandy did a lot of damage to the house, but it wasn't categorized as a hurricane when it came up to my area.
Right.
So I was, my insurance covered.
Well, right, and that was a huge issue.
But it has to be labeled as a hurricane.
Well, if everybody, okay, so this is an interesting little side. Everybody remembers, or you may not, there was a whole big issue with the states of New York and New Jersey, and both governors pushed for the fact that when Sandy hit the coast, that the winds were actually, in their minds, or whatever the data they were referencing, just under Hurricane 1 status, and therefore it was not a hurricane, it was a regular storm. That's why it got called a superstorm and not a hurricane, and that allowed all of those wind claims to be paid without being subject to a wind or hurricane deductible, which companies like Allstate and State Farm and a number of others all had. So it was horrible. The insurance companies were, just mortified that they had to spend billions of dollars more than they would have had it been called a hurricane. But that's the way it went. It was probably the right thing to do. But, I think we'll get into this more. I think you're going to see a lot more wind. And then it's a question of, do you have a named storm deductible, which would be like a hurricane or a tropical storm? They actually put a name on it. Or did you just have wind damage and you actually have a wind deductible? You got to read the policy, or you got to have somebody tell you what's in it. So the other thing is that building policies usually exclude or have minimal coverage for things like sewer and drain backup, underground water main sump backup. So there are almost always endorsements that can be added onto homeowners policies or condo co-op policies that can up the limits for those types of water claims. And our firm and many of our competitors know this, and we're putting the proper endorsements on the policies, but always a good thing to make sure, especially in light of what's been going on with all these environmental disasters, that you have enough sump, drain, and sewer backup coverage on the policy, and not just with the standard coverages. Sometimes these water coverages have higher deductibles, and that varies by carrier. So it's also interesting, again, if we're focusing on water and water events, to know that different carriers handle water differently. And so, you know, your broker should be in tune to that. Some carriers have $25,000 deductible on like sewer and drain backup, but you're not going to have a sewer and drain backup that, you know, is normally $25,000. So that's basically like having no coverage at all. So, you know, someone's got to be paying attention to what are the deductibles on these water type claims so that you actually have coverage when you need it. So what's a flood? That thing up in the left-hand corner where there's that pool of water from water spraying out of that pipe underground. Flood? Yes. Yes? Yes, no? Maybe so?
With the lower right corner?
The lower right corner. That's a roof with a ton of water sitting on it.
No,
All right, put your hands up if you think that pipe that's underground that's spraying water out is a flood. No one thinks that's a flood. How about that pipe on the right up there, copper pipe? That's a flood.
Yeah.
Okay, what about that faucet dumping water that's overflowing under the kitchen floor?
Yes.
No, actually a flood is any outside water coming into the house, right?
So you would say none of these are floods.
No, it's a flood event in your house. If your bathtub, the toilet, the sink.
Okay, so for insurance purposes, none of those things are floods. Right. They may cause what looks to be like a flooding event, but none of them are actually floods by the definition of insurance. These things here are floods, to your point. They're happening outside. We have an overflow like of a levee up there. We have a huge area, a couple of acres of standing water that would normally be dry. We have a city street in New York, probably somewhere, that's got standing water. We have the ocean basically coming on to the street in this picture here. These are examples of flood. And flood is, by definition, according to FEMA, flood is a temporary, this is a watered down definition, a temporary condition, a partial or complete inundation of a normally dry area or two or more properties from either an overflow of an inland or tidal waters or a rapid, an unusual and rapid accumulation of runoff or surface water. Floods, look like this stuff. All right, so flooding ends up being this huge issue, right? Because we have these hurricanes, but wind is normally covered, sometimes covered, subject to a wind deductible, but still, usually it's covered, it's not excluded. So it's flood, remember that's the $100 billion gap between insured losses and actual losses, right? So flood becomes this big deal in insurance. The more of these water events that we have, the more of these hurricanes that we have. So the homeowner policy usually excludes flood. You see this in commercials. It's such a big deal, and after Sandy it was such a big deal. So many homeowners didn't have flood insurance, and they were shocked. They had no idea that they didn't have flood insurance. It was the first time it came out. So now they're running ads and spending tax dollars, to inform the public. You probably don't have flood insurance. And if you've ever looked at your homeowner's policy, you get stuff that says you don't have flood insurance. So that's a big deal. Some carriers, like the higher-end carriers, Chubb, AIG, Pure, Cincinnati, may offer flood coverage by endorsement. And a flood policy is typically the only way to cover water that comes into your basement and creates, a scene like you see on the right there. So flood insurance is a big issue for homeowners because they don't actually have it until they get it. It's not bundled up with everything else in the homeowner's policy. And then commercially, meaning commercial buildings, office buildings, multifamily buildings, apartments, co-ops, condos, those policies may include an endorsement if the broker is adept in those types of businesses. He's going to put a flood endorsement, or at least offer a flood endorsement, if one is available. Now, when would one not be available? When would you not be able to get a flood policy on a condo or co-op or a office building as part of the package policy from Greater New York or travel. If it's in a flood zone, okay? What kind of flood zone? That was an interesting point you made. If it's in a flood zone. So the fact of the matter is that every single address in the United States of America is in a flood zone. Every single one. Every single one. Question is it in a low-risk flood zone or a high-risk flood zone? If it's in a low-risk flood zone, which is typically like an X zone, then you can get flood insurance on the package policy with one of those carriers I mentioned. The good thing about it is, in addition to being able to get it, is that it's very inexpensive. It's normally like a couple $1,000s or maybe even less to add it onto the policy. And it usually has very high limits of coverage: $250,000, $500,000, $1 million, sometimes $5 million. However, subject to typically a higher deductible than the policy deductible. It could be $25,000, $50,000, might even be $100,000 deductible. So the good news is you have the coverage. It's cheap. The bad news is, you're going to have a pretty big flood in order to be able to use it. And the carrier knows you're in a low-risk flood zone, so it might not come up. But at least you can get it. If you can't get it on your homeowner's policy because you don't have one of those carriers that I mentioned, the high-end carriers, or you can't get it on your building policy because you're not in a low-risk zone, then you have to go to FEMA. FEMA provides the National Flood Insurance Program. It's like the flood insurer of last resort. It's for homes, residential buildings, commercial buildings. It's one policy per building. So if you've got a 20-unit garden-style condo or co-op, you have to buy one policy per building. And it's one deductible per building. So if you've got 10 buildings, you've got 10 different deductibles. And it's more limited in coverage than what you could get on the homeowner's policy or on the commercial package policy if you could add it by endorsement. There are special underwriting rules for condominiums in particular that make flood insurance very expensive. I don't want to go into the details, but if you've got a condo and flood insurance is required for the building because it's in a high-risk zone, it's extremely expensive. It can be as much or if not more than the actual package policy. Yeah.
Can you also address for co-ops, if that's
different? Yeah, so it's different for co-ops. It's not as expensive for flood insurance for co-ops because the rules for mortgages relative to co-ops are different from condominiums. So long story short, you're not required to carry as much insurance for flood insurance for co-ops as you are for condos. If you have a $10 million condo building, you have to carry like $8 million of flood insurance. No ifs, ands, or buts about it. But if you have a $10 million co-op, you can carry $500,000 of flood insurance. You'll be fine. And in reality, only one floor is going to be subject to a flood anyway, probably, right? So co-ops are different. Higher risk flood zones mean higher rates, but the rates are very reasonable, and there are several deductible options through FEMA. So as I said, everybody is in a flood zone. We're all in a flood zone. All properties under flood zone, there's different types of zones that designated as low risk or high risk. So a 100-year flood zone is a flood zone that has a 1% chance of flooding in any given year. This would be considered high exposure, high risk. We know that these floods have been occurring far more than once every 100 years lately. And then they have something called a 500-year flood zone, which anything above that is considered a low-risk flood zone. But who has records from 500 years ago? So I'm not sure how they calculated that, because I'm pretty sure they don't have records from 500 years back, but that's how they do it. So there are low and moderate flood risk areas, and if you've ever had to look at a building and get what's called a flood zone determination, or get one for your home to get flood insurance, you'll see letters like X, and X shaded, and B and C. So if you're in X shaded or B, you're in 100 years, somewhere between 100 and 500. If you're in an X unshaded, you're in a less than 500. That's low risk. So you got moderate and low, and then you got the high risk. That's where where flood insurance is expensive. So you can't get it on your homeowners. You can't get it through the package. You got a 1% or greater chance of getting a flood every year, and those are flood zones like A, AE, AH, AO. They're associated with ponds, rivers, streams, and then V and VE are associated with oceans and bays where you have wave action. All right, I don't want to spend too much time on this, but you can see here, here's a house this is where the house actually should be. It should be on stilts, and it should be about the height of the roof line, because here's the sea level. Here's the typical flood level when there is a flood, but then if there's wave action from wind, the flood level goes all the way over here, would literally be coming over the roof of that house. So that's how they determine if you're in a BE, an AE, an A, or way out here you're in an X, because that exposure doesn't exist. So here's Westchester, and you can see all these boxes. There's an unbelievable amount of information on the internet. If you just start Googling like Westchester flood zones, it's incredible how much information there is. It goes on and on and on. You can like zoom in on your home, put in your address. Everything you need is there. But all of the little boxes that have red areas, those are high-risk flood zones. Obviously, they're along the Hudson River or along the Sound. But here's the thing. There's a bunch of other zones like Mount Vernon, Bronxville, Tuckahoe. Have we ever seen flooding in Bronxville? It floods all the time. I mean, I saw lakes in parking lots in Bronxville that were like 10 feet deep, cars underwater, right? And we're probably in these other areas where flood insurance isn't required. It's probably something like what we had in Texas, where 52% of flooded properties from Hurricane Harvey were not in designated flood zones. We're not in high-risk flood zones, and probably didn't have flood insurance. All right, so the things to remember are know your deductibles, right? If you've got a wind deductible or higher deductible for water-related coverages, wind-driven rain might be excluded if the opening wasn't caused by the wind. And then the issue with water is this. I just told you about a lot of endorsements for water-related claims, right? There's underground sewer and drain, there's underground water, there's sewer and drain backup, some sewer drain backup, and then there's flood. Some carriers have 3 different endorsements for those 3 types of water. So if you've got one but not the other 2, or 2 but not the other 1, and you get a water-related event, you don't want to be arguing with the carrier that it was really a sewer backup when the carrier is saying, no, it was the flood that caused the sewer backup, so we're not covering it, and you don't have the flood insurance. You need to have all the coverages. At this point, you don't want to be making that argument, it's going to delay the claim, everyone's going to get upset, and it's going to be a bad situation. So have all of the available water policies, including flood. Make sure you have sufficient limits so that the carrier doesn't get an out. All right. Some other things that I don't want to spend time talking about too much, but just to make you aware of it. Critical coverages are loss of use. If you have a homeowner's insurance policy from Allstate, Geico, State Farm, one of the less expensive premiums, and that's great that you're paying less. But if your home is flooded, or even if it's burnt down by a fire, and you're out of that house for a year or more, you're not going to be able to go rent the house across the street that's basically the same house as yours for 18 months with certain types of policies. And same thing with building coverages. If you lose the building for a year and a half because it was a huge fire loss or a hurricane blew the thing over, it's going to take more than, let's say, a year to build that thing. You've got to make sure that you have sufficient business income coverage. Off-premise power utilities, especially for businesses, is a big deal. Your building may have been fine, but if the power doesn't work, for 2 weeks, what do you do? And are you going to get paid on that claim because you can't conduct business? And if you're involved in construction and development projects, you got to have flood insurance as well, even as the building's going up. This slide here just shows you that we got a big problem with the flood insurance program. Right, it's bankrupt. Right now, it's $25 billion in debt. That's before the storms that we just had. So now that blue on the right side of that graph is debt to the Treasury. So we're going to have a big problem there. I think that what you'll see, especially with flood insurance, possibly with the hurricane-related coverages, you'll see rates are probably going to increase in flood-prone and wind-prone areas. I think deductibles will, you might see an uptick in that next year. I think that you'll see a tightening in the availability of these water coverages, or they'll cap limits lower than where they are right now, where you are able to get $1 million, maybe only be able to get 100,000. You'll see more carriers denying flood insurance because you're adjacent to a high-risk flood zone, even though you're not in one. You might see more endorsements like limiting wind coverage if your roof is more than 10 years old. So if you're in property management or you own buildings, make sure your roof, you should start addressing an older roof or approving for a new roof soon, because one way or another, an old roof will kill you. Either there's going to be holes and the carrier's going to say, those holes were there, the wind didn't cause them, we're not covering that claim, or you're going to have a huge loss. It could have been avoided if you had a newer roof, or your claim's going to be excluded because they exclude coverage for old roofs.
Now,
So,
I got a question.
Yeah.
What if that roof is asbestos?
then you want to replace it, or are you? If it's asbestos, should you replace the roof? Is that the?
No, I'm saying, would the insurance cover that?
They would cover it, and then you would not be able, most likely, to replace the roof with a new asbestos roof. Are you saying would they cover the tear?
The cost of removal of the asbestos.
Yes,
They would
yes,
cover that?
they would cover that. Now, if somebody got sick from the asbestos and sued you, there's probably a liability exclusion for asbestos unless you have a pollution policy. So that liability claim would not be covered if someone got sick. Which is why you have to have contractors that are, have the right pollution insurance and are able to name you an additional insured on their pollution policy, because you probably don't have that coverage for liability. Okay, but if you have to tear off your half-damaged asbestos roof, the insurance will pay for that.
That's only due to a storm, or should say, what's that?
I think what he's trying to ask is, if my roof is just older and I just want to get a new one to be proactive, and my roof is asbestos, will insurance pay for that?
Nope. Great question. One thing to know about insurance, always remember this. Insurance is not a substitute, not a substitute for doing maintenance. So if you have, like I said, if you have a roof with a bunch of holes in it, and that's what allows the water to get in, they're not going to pay that claim and give you a new roof. And secondly, insurance doesn't pay you to be proactive. It doesn't pay you for taking steps to mitigate the potential for loss. That's the way it works. It only covers accidents, unexpected, unforeseen accidents. Maintenance is up to you. So just, as I start moving toward closing here, these are pictures that I came up with, from these last few hurricanes. I mean, you just look at these people, and I mean, you can feel the devastation and just the horror and the life-changing events that they've gone through. So, hopefully none of us will ever have to go through that. And it doesn't have to be a hurricane. It could be a fire. It could be a fire to your building, or even worse, to your condo or co-op or your home. So, my final thoughts are, if you haven't been affected by a catastrophic event, time is probably not on your side. These things are happening more frequently, and it's only a matter of time before it happens, to us. It's unfortunate, but that's reality. So I would stop thinking, that you'll never be affected by a hurricane or a flood. Things are changing. Places that never flooded before are flooding. Hurricanes that never belonged up on the northeast are now in the northeast. So, it's not a good thing to keep wondering, what's the likelihood we'll need that insurance? If I probably won't need it, why pay for it? Stop believing if it happens, it won't be that bad. You saw the faces of those people. It's bad, right? Really bad. So stop delaying a thorough review of your insurance program to confirm proper coverages for natural disasters. And you never want to say, if I had only bought that insurance. If I had only bought that insurance. I mean, those are the worst words that you'd have to say. Buy the insurance and then hope you never have to use it. Right? So you should speak to your, this is not something you should do on your own. Talk to your broker, whether it be your personal broker for your personal insurance or your commercial broker, or if you don't feel comfortable, don't have a relationship, please call us. We do these things all the time. They're free. Your broker will do it for free. We'll do it for free. But somebody should go through your policies thoroughly, literally page by page, and then tell you, here's what you got, here's what you don't have, here's what you can get if you want to pay for it. Okay? All right. Thank you.
Thank you.
Yeah, my card's up here.